Hello, I am here to teach you about the topic of convertible preferred shares. There are two classes of stock that companies offer, common and preferred. These come with different financial terms and offer different rights in relation to the governance of a company. We'll review some of the key differences between these two types of stock and the implications. Common stock is basically more common. So when you hear people on the street talking about owning stock, it's most likely that they're talking about common stock. Dividends, which are taxable payments, are paid to a company's shareholders from its retained or current earnings. Preferred shareholders receive dividends before common shareholders. Common stockholders have the additional benefit of being able to vote on company issues and to vote for the leadership team. Usually, one stock equals one voting right. Preferred shareholders, on the other hand, do not receive voting rights. Because preferred stock guarantees a regular dividend, its earning potential is lower than that of common stock. Therefore, preferred stock has lower risk and lower return, and common stock has higher risk and higher return. Now let's move on to the explanation of convertible preferred shares. Convertible preferred shares allow the exchange of preferred shares into common shares at a specified ratio. Convertible shares give greater security of a preferred share with the option to convert if the common share value has increased. The book value of preferred shares is used for recording, never market value. And from an accounting perspective, conversion does not result in either a gain or a loss for the issuing company. So basically, convertible preferred stock are preferred issues that the holders can convert for a predetermined number of common stock. This exchange can happen anytime the investor chooses, and it doesn't matter how much the common stock price is at the time. However, it's important to note that it's a one-way deal, so once the preferred shares are converted to common stock, there's no going back. You can't switch common stock back to preferred. Let's look at a hypothetical example of the conversion of convertible preferred shares into common shares. For example, a company issues 1,000 no par value convertible preferred shares at $75 per share. One share converts into 10 of no par value common shares. These no par value common shares are currently valued at $5 per share. Now the question remains, would investors want to convert at this point? I'm going to take you through the steps of calculating this. First, let's figure out the value of the convertible preferred shares. If we look at the question, we know that we have 1,000 at 75 per share. So our math formula is simply 1,000 times $75, and this equals $75,000. Next, we figure out the value if we were to convert to common shares. Again, looking at the question, we know that we have 1,000 convertible preferred shares, but each share converts into 10 of the no par value common shares. Therefore, we have our 1,000 times 10, which we know equals 10,000, and each share is worth $5. So we multiply this 10,000 by $5, and we get 50,000. So right away, we know that 50,000 is less than the 75,000 we originally had with the convertible preferred shares. Therefore, we would not want to convert at this point. From an accounting perspective, it is important to know how to record the conversion on the books of the issuing company. The original amount paid for the preferred shares is transferred to the common shares account. From the example we worked on earlier, we knew that the original amount paid for the convertible preferred shares was $75,000. Therefore, the journal entry would simply be debit preferred shares $75,000 and credit common shares $75,000. I would like to leave you with two important things to note. First, the book value of shares is always used in the conversion. Second, the conversion of preferred shares into common shares does not result in a gain or a loss for the issuing company. I hope you've enjoyed my tutorial today on convertible preferred shares.